In this video, we're going to talk about how to get a real estate loan using your LLC. Stay tuned. Okay, so you want to learn how to get a real estate loan and you want to use your LLC. So let's talk about that for a second. Are you looking to use that money on the acquisition, the front end, when you're buying the property, or are you looking for that money on the cash out refi if you're doing the BRRRR method? In this video, I'm going to talk about both techniques, both processes, and I'll even share with you what the qualifying factors are, all right? So first thing is when you're buying a property, you're going to obviously need money, a real estate investment loan or some type of line of credit in order to purchase the property that you're looking to buy. Maybe you're gonna do a fix and flip, maybe you're gonna do a buy and hold. Doesn't really matter on the front end, on the acquisition side. You wanna decide how you're gonna get into the deal. Now the way I like to do it is I do a combo technique, which is basically I use hard money loan for about 75% of the total project. And then the other 25% of the total project, I use a business line of credit or a business credit card. Now I have lots of videos right here on this channel that you could look at that talk all about how to get business credit cards, how to get business lines of credit. So if you're going to get a hard money loan on a property, I would go to a local real estate networking group or a local real estate investment club or a local Facebook group where people in your state that are actively doing deals that you could talk to, that you could ask, who are they using for hard money? The reason I mention that is when I first started, my real estate career years ago, I didn't really know who to use, and there are actually some shysters out there that'll take advantage of newbie real estate investors. So the best thing I could suggest for you is get a referral from someone that's actually close to the hard money lender. Okay. Once you do that, you could find out what the hard money lender's requirements are. And really, there's not much you have to do with your LLC at this point to actually qualify and get approved for the loan, for the property, because primarily it's the asset, the property that you're getting involved in. Is there enough equity? Does it look like you'll be able to fix and flip it or fix and refinance it? Those are the things that the hard money lender is going to look at to help you qualify or not qualify for that investment loan, okay? So you could use a single use entity. We have another video that talks about that to get into the property, but basically it's an LLC that's formed that is formed for the purpose of that one property that you're purchasing, okay? Now, secondly, you're gonna need some down payment money. What about the other 25% that you're gonna use for the down payment or for parts of the construction? And what you could do is actually obtain either a business credit card or business line of credit to serve as the remainder money to get into that deal. So if you're looking to do that, you're going to want to build up your LLC or S Corp or C Corp, whatever your CPA suggests, right? You're going to build up your business credit profile in such a way that banks are going to lend to you. We have lots of videos I can share with you on that. After you build up your business credit profile and all of that, and you go out and you get business lines of credit, you get business credit cards, you could pull cash off the business credit card if you wanted to. There's a few different techniques that you could do that. One of my clients actually uses a service called Plastic. It's PLASTIQ, so it's Plastic with a Q, and he has checks from Plastic written to the title company, and that's how he gets money off his business credit card to purchase real estate. So I thought this was very smart. I want to share that with you guys. Of course, if you get a business line of credit, it's a lot easier to pull cash from the line of credit because you could just transfer the money over, you could pull it out as cash, you could write a check for it, or whatever. So that's the front end of actually buying a property, and you need hard money or you need business lines of credit, you need business credit cards. What do we do on the back end, right? The only method that I'm familiar with when I'm buying real estate and getting long-term real estate investment loans in my LLC is using the BUR method. So you could actually just go to a bank, you could put your traditional 25% down and qualify for the loan, but then your 25%, your down payment to get that 2-family or that 3-family property is tied up inside of the property. Not that that's a bad thing. If you're making good ROI, good return on your investment, maybe that works for you. But the method that I like to do, and I have a whole training video on this, is the BUR method, which essentially is to buy a property, renovate it, stabilize it, get it rented out, and then now that you've improved the value of that property, you refinance it, you pull all your capital out. So let's talk about that. Refinance. And by the way, you can't always pull all of your capital out, but in the cases that you can, it's a lot of fun because your return on your investment is practically infinite if you have no out-of-pocket money and you're left with a income producing 2 or 3 family. So how do we do the cash out refi. On the cash out refi, after you bought the property, you fixed it up, now it's time to refinance it. You could either hit up a local community bank or credit union, and I actually use the same banks to do the cash out refinances that I share with you in other videos, which is essentially to find local community banks, local credit unions that are in the area that you're investing in. Okay, and the reason for that is they do their own underwriting, and they have a lot of programs that you're not going to find online. You're not going to find in a pamphlet or a brochure. You're only going to find out about these programs that these local banks offer by networking with local banks and talking with the vice president of business lending, talking with the loan officers, and they'll share with you through the relationship that you build with them some really cool programs and how to qualify for things. In a lot of cases, they'll actually advocate for your approval, and you don't necessarily get that same type of treatment with a large, big national lender. That's why I really push for local community banks. So when you're doing the cash out refi, you can work with a local community bank. There's some technical formulas and things that they look at to make sure that they're willing to do your cash out refi, okay? To make sure that it's okay for you now you stabilize the property and you can pull your money out. One of the things that banks look at is, it's called seasoning. And essentially what seasoning is, it's the amount of time that you've owned the property from when you bought it to where you're trying to do your refinance, okay? Some banks don't even have seasoning requirements. They're a local community bank or credit union. It's not part of their underwriting requirements. Some banks have very strict seasoning requirements. They might need you to own the property for 6 months or a year or even longer. So that's one of the things you want to look at. The next item that you want to look at is called debt service coverage ratio, DSCR. Now, I'm not going to explain exactly how to calculate debt service coverage ratio, but essentially you need to make sure that the income from the property covers the debt, the mortgage of the property. Okay, so the income has to be higher than the mortgage, than the debt of the property, plus some breathing room. Okay, so generally the banks like to use about 1.25% ratio in average. So there's got to be some 25% breathing room on the difference between the money coming in on the property and the money going out. Now, you could actually do cash out refinances, which I have used as well in some cases with some of these online niche lenders or landlord lenders, right? Companies like Vizio, for example, they'll do your cash out refinance and then they don't require as much paperwork. So when you do the local community bank, the credit unions do the cash out refis, you're going to get better rates, you get better terms. There's banks that do 30-year fixed at a really great low rate, but they need full documentation. Now, interestingly enough, though, the full documentation, you don't have to necessarily have a lot of income in order to qualify for the cash out refi, because you can use a percentage of the future income that property is going to bring you as part of qualifying, which is really cool. So, but let's just say for whatever reason you don't have anything, you can't show tax returns, you can't show, right? So then you could go after some of those some of those national banks, some of those niche lenders. And it's amazing the programs that are available right now. They weren't available 5 years ago. They weren't available 10 years ago. And now there's literally banks and lots and lots of money behind programs specifically for landlords doing the BRRRR method, doing this cash out refi method. So they don't necessarily need tax returns and financials, and their requirements are not as strict with credit, but you'll be paying a premium. You'll be paying a little bit of higher interest rate for one thing. And secondly, there's usually prepayment penalties. So if you refinance in a couple of years after getting that loan, a lot of times there'll be prepayment penalties. So you just want to make sure you understand completely what you're getting into. So that's my process of getting real estate investment loans using LLCs. If you like this video, hit the thumbs up. And if you want to look at how we are able to get $100,000 in business lines of credit and business credit cards in just 30 days without walking into a bank, go to businesscreditworkshop.net, download my free report. Go ahead and subscribe if you like these videos, you want to see more, so you'll be notified when the next video comes out.